Hi there, I'm Verified Champion Trader Kevin Davey, and today I'm going to talk to you about the Martingale debacle of July 2024. So let's get started. In this video, I'm going to talk about what happened in July 2024 to a lot of people who were trading a Martingale approach with their algo trading or just with their trading in general. And hopefully it didn't happen to you, but whether or not it did or not, hopefully I can give you some background and some lessons learned on this so you know what you're dealing with a Martingale strategy. Now, Martingale is not a full strategy by itself. You still need buy and sell signals. But what it is really a position sizing approach, and you apply that over your strategy. So the way it works is, first you start out by risking or betting one unit. So this could be one contract, could be one Forex lot, and if you win, you just keep betting one unit over and over again. But the Martingale part comes in when you lose. When you lose, you now double your bet. So after the first bet, if you lose that one unit, your next trade will be 2 units. And when you finally win with this, and it might go for a while before you win, you go back to 1 unit. Now, this gets kind of tricky because the sizes of your trades could get huge, and I'm going to kind of walk you through an example of that. So let's just say you start out betting $100, and going into this trade you haven't won or lost anything, so in the pink it's 0, and you bet $100. Okay, if you win that trade, your total P&L is over on the right. It's going to be $100, right, because you won that trade. But let's say you lost that first trade. So this first trade is minus $100. Now, going into trade number 2, you're down $100. And let's say that second trade, which you've doubled your size, let's say that one wins. So that one wins $200. So if you add them up, you lost $100 on the first trade. You won $200 on the second trade. So overall, for that whole sequence, you won $100. Nice. Let's say that second trade also loses. So now, going into trade number 3, right before you enter trade number 3, you are down $300 because you lost $100 in the first trade, you lost $200 on the second trade, and now you have to bet $400, okay, per the Martingale, because you double your size every new trade. And if you win, again, minus 100 minus 200 plus 400 totals out to be plus 100. So you win $100. Again, you went through that sequence, 3 trades, and you ended up with $100. And you could say, okay, well, I don't see what the problem is. I just keep increasing my bet size. Eventually, I'm going to win. Well, that could be true. But look what starts to happen. Let's say that third trade loses. Now going into trade number 4, you're down $700. And remember, you only wanted to make $100 overall. And now you're betting $800. So you're betting 8 times your original risk just to get all those other losses out of the way. And if you win, you end up with $100. And you can, as you can probably imagine, this just keeps growing every time. And if you get a sequence of 7, 8 trades, you're going to be in the 5 figures of what you're betting. And remember, you start out with 100. So here's an example. Let's just say you kept losing. So you lost trade 1, trade 2, trade 3, 4, 5, 6, 7. Now going into trade 8, you're down $12,700. And your bet size is going to be for $12,800 because overall, you want to make $100 on the whole sequence. So if it works, if that 8th trade is profitable, great. You win $100 overall. So you went through a lot of pain to get to that $100, but you finally got there. And remember, at one point, right before trade 8, you were down $12,700. That's a lot, right? Just to get $100 back. Well, that's if you win that 8th trade. What happens if you don't win that 8th trade? Well, now you're out another $12,800, so you're down $25,000 overall. So in 8 trades, you went from, hey, I just want to make $100 to being down $25,000. That's what Martingale does. Now, most of the time, you could say, hey, I'm not going to have 8 losers in a row. And most of the time, you won't. And that's what's deceiving about Martingale, is that eventually you get a winner. But you should think of it in the flip side. Eventually, you're going to have a string of losers so big, so long, that you're not going to be able to recover from it. And it will wipe you out. Okay? So that's Martingale, and that's my warning with Martingale, is eventually you're going to run out of capital to trade with. And that's because a huge loss is definitely possible. It's not likely, but eventually you're going to have a string of losers that you cannot recover from because you keep doubling your bet size. And you're either going to run out of margin, run out of account size, whatever. You're not going to be able to do it. Okay? So, what happened to people who were trading Martingale in July 2024? Well, let's first back up and let's look at the Australian dollar Japanese yen forex pair, because I know this crushed a lot of people. There were other markets too that around the same time killed people, but I just took this as an example. So let's first look at the weekly chart for this, and you see from 2020, really right around the start of COVID was probably the low point. The Australian dollar yen pair had been moving up pretty nicely, okay? So it's in a nice uptrend. So a lot of traders said, hey, you know, it's in a long-term uptrend. This uptrend's been going for 4 years. It's going to continue, so I'm just going to buy and use a Martingale approach because I'm going to follow the trend, and hey, you know, maybe I'll get a couple losses in a row and, you know, double my size a couple times, but eventually it's going to work out for me and I'll gain that money back and everything will be good. Okay? That's the theory. And here's just some sample trades of that approach. And you can see, for example, you can't see off to the left, coming into it, you were buying 400,000, which would be 4 normal size lots, and you lost, and you had to buy 8, then you had to buy 16, but eventually you got a profit here, and then you start over at 1 lot, which was 100,000 units, a standard Forex lot, and you lost, so then you had to go back up to 200, but then you won, dropped back to just 1 lot, lost, and then had to go to 2 lots, and so on. You can kind of see how it works. It just doubles after every loss, and after a win, it just starts over from the beginning. So that was just a simple trend following approach that I applied to the data from January 1st, 2024. And remember, the reason we're thinking, hey, we'll just buy and use this Martingale is because we had the last 4 years of a nice uptrend. So a lot of people think the uptrend will continue, okay? And for the first half of the year, up until July 17th, 18th, it did. And look at that. Look at that equity curve. Yeah, there's some temporary drawdowns where you had to double your size a few times, but eventually it recovered. And over the course of a little over 6 months, you had about 120% annualized return if you were trading with $50,000 equity. Now, Obviously, the amount of equity you'd use depends on the leverage available to you. You know, in the U.S., if you were trading Forex through a U.S. broker, you're kind of limited with your leverage because this is considered an exotic pair. It's not like the Euro USD where you can get some more leverage. But those of you outside the U.S. could probably get a ton more leverage than U.S. citizens. And you could probably have been running this strategy with a $50,000 account. And look at that. After July 17th, you're thinking you're a genius. You're a trading genius. Look at that nice curve. And look how well it's worked out. And you're going to have over 100% return. So you're thinking all's well and good. And I'll tell you, it's not only people trading this strategy, but there's a lot of people out there who were selling bots, expert advisors, strategies, whatever you want to call them, that were doing this same thing, not only in this market, but in other markets. And they could show this equity curve. And yeah, it's a pretty legit one. And who wouldn't sign up to that? That you'd think, wow, this is great. Whoever I'm buying this from is a genius. This is terrific. Okay, well, they were pretty much a genius up until July 17th or 18th. And then starting on the 19th, that's when the storm clouds were probably coming in a little bit earlier, but it was tough to see. And remember, with Martingale, you expect a few losses. You just don't expect like 10 in a row, but you expect a few in a row, and then you'll eventually recover. Because that's how it's gone, right? That's what it showed in that equity curve. It showed you recovering from those drawdowns. But during this week, things got nasty. And here's the second to last bar ends, I think, July 19th. So it already started its downtrend. And then the next week, July 20th to 25th, or around then, that was a big drop. Okay? And it was significant, and it certainly was almost like nothing you had seen in the past 4 years. So it was very quick, very abrupt, and very deep. Okay? So how did our Martingale strategy do during that period? It was disaster. It was just a disaster. There's what it looks like. So remember, I showed you that equity curve up until this point, and then the bottom dropped out. All your gains are gone in a matter of less than a week, probably a day or two, and you probably blew out your account. I mean, you know, if you had a $50,000 account, well, you know, here's minus $50,000, so you're done. So you would have never gotten this bottom part. But that's what happened. And it happened to a lot of people trading similar strategies. You know, they were probably just trend following strategies. I just took a simple trend follower as an example here to show you, one, how easy it was to make money with Martingale. But this is obviously what you need to focus on when you're thinking about Martingale, that this kind of thing can happen. And it does, and it will happen. Might not happen for a while. You know, you might be able to go years even before it happens, but eventually this is going to get you. Okay? So, in my opinion, Martingale works great until it doesn't. Here's the same strategy just starting in 2021, and that looked even better during the early part of COVID. Look at that. I mean, yeah, you got some short drawdowns here, but eventually you recovered, got up, and then you had a loss, and eventually it fell again. And I put, the reason you see that drop and then a recovery is I put a limit on the number of contracts you could trade. You know, you can't trade an infinite number of contracts. You'd never, or lots. You'd never be able to do that in the real market. So I'm probably actually being a little optimistic on what you could have traded there. But the point is, it worked great until it didn't. and then it started working great, and then it fell again, worked great, fell again. That's what Martingale does, okay? You get these nice smooth up trends in your equity, and then bam, you get blown out, okay? So my advice, unless you're prepared to blow out your account, and you might just go for broke and say, hey, I'm going to try it with whatever size account, and either I'm going to do great or blow it out. You know, if that's your method, then, you know, maybe Martingale would be a way to get some big gains as long as you get out before you blow up. But remember, if you don't want to blow out, don't use Martingale. It is dangerous. And you can just probably search trading forums and find lots of people who really took it hard and got hit hard, lost their accounts, blew out in a matter of hours or days during July 2024. And tell you what, I guarantee it's going to happen again sometime, because that's what Martingale does to you. So, hope you enjoyed this video. Feel free to leave comments, questions, concerns. Please subscribe to my channel. Head over to my website. Get a free crude oil strategy that just trades one contract. No Martingale there. And I thank you for watching. I'm Champion Trader Kevin Davey. Have a great day.